this is the question of our time. We will, over the next 10 years, certainly, I think, be trying to find the answer of what is the storehold of wealth, because usually it's a money and then a debt instrument in holding that money. But as that goes down, then there is the question of what it is. What is that currency and storehold of wealth? So we're in that place. It's always handy to be the thing that is your buying power.
Billionaire investor and founder of Bridgewater Associates, Ray Dalio, has recently given some golden investment advice to investors looking to stay afloat despite the gloomy macro environment. While speaking at the Greenwich Economic Forum in Connecticut, Dalio discusses everything from the current state of the U.S. economy, inflation, China, and most importantly, investment strategies for all categories of investors. The billionaire explains that the U.S. economy is undergoing a paradigm shift from the era of low interest rates and free money to a high interest rate environment that Dalio says will be painful. He explains that this perfect storm of crisis has been caused by rising debt levels, ridiculously low rates, infighting between politicians, and the economic impact of the war in Ukraine. Despite the gloomy macro environment, Dalio, who has over 40 decades of experience in the financial markets, believes some golden investment strategies still work. He explains that the first thing investors have to do is think of an asset that will serve as a perfect storehold of wealth. According to Dalio, such an asset will be a hedge against inflation, a problem that the billionaire expects to last much longer than policymakers are predicting. Dalio also discusses the Chinese economy and what the future could look like for the world's second largest economy. Please watch, share, and like this video as we bring you this masterpiece from one of the greatest minds in the industry. Also, ensure you drop your comments and observations in the comments section. Subscribe to the channel and turn on post notifications for more videos like this. Thanks and enjoy the video.
You're going to see it more in inflation hedge assets. So like if you're thinking about a bond, it's better to think about an inflation hedge bond than to think about a TIPS or inflation hedge assets along those lines. And I think that you're going to see then the parts of the economy. So like I think basically if I was saving, what would I want to save in? I'd like to save in the things I know that I'm going to need. So I would like to save in like my residence, my house. I would like to save, if I could, pay forward my kids' education, pay forward the food or the health care that I can, and so on. I would want to save in those things to buy forward the things I need, most fundamentally. I think if we start to think that way, not only in terms of the investment, but what are even the meat and potatoes type of businesses that are doing that? And then also, I think that you have to think geographically. Where is best in the world? Best in the world are countries in which they're earning more than they're spending and their balance sheets have more assets and liabilities on them, that they're civil with each other and they're not in conflict, and that they're not in risk of an international war. It's basically those fundamentals. And then I would say we are in an intellectual revolution, that our capacity to invent and think and use technologies to help us think has never been greater than before. And so those revolutionary type of technologies, when they're cutting edge, I think that those are good investments. And I think then what you have to do is also diversify. That because the thing I learned is it's all return in relation to risk. Everybody looks at how much return you make, but it only takes one time to knock you out. You know, Bridgewater's been doing this 47 years, and we survived. You have to survive first. It only takes one time to knock you out of the game. And so you should never lose more than X amount of money that you can't recover, because you lose 50%, it takes 100% to get back. So diversification, knowing how to do that well, allows you to reduce your risk by up to 80% without reducing your return. So I think that those would be the approaches that I would emphasize in this environment. And I would not, generally speaking, I don't think we're going to have a sustainable interest rate that is going to be a real adequate interest rate. And so I would stay away from debt issues. Debt. Now, the interest rates went from ridiculously stupid interest rates, and they're coming into an area that still I think is too low, but it's not as ridiculous as it was before. They have to get really, so when you play with that game, if you want me to just do it, I'll just give you my thought real quick. Okay, what would be the equilibrium interest rate for the equilibrium inflation rate, okay? We're going to have probably, I would estimate. We estimate maybe somewhere between a structural employment inflation rate, maybe in the vicinity of between 4 and 5%. In a highly uncertain environment, you can't even be sure of that, but let's say that. That means then what is the real bond yield? Okay, so you have to go to that. We now have about a 1.5% real bond yield. Do you still have a 1%? So you have to have the bond yield give you something. I don't know what that is, but that brings it above 4.5% to some other number. And you have to have relatively tight money, which means that you have a fairly flat yield curve. So I don't know whether that's 4.5% or the economy could not take an interest rate much higher than that before it's going to be negative.
According to Ray Dalio, investors should invest in needs, technological innovations, and buoyant economies and efficiently diversify their portfolios to limit risk. What are your thoughts on these suggestions? Please let us know what you think in the comments section below. During his interview with Bloomberg's David Weston, the hedge fund manager also discusses the state of the Chinese economy, which is still reeling from a nasty housing bubble burst. The Chinese government's crackdown on the debts of property developers started a severe real estate crisis that forced China Evergrande, one of the country's largest builders, to the edge of bankruptcy. In the resulting chaos, tens of thousands of homebuyers decided to stop making mortgage payments, banks' loans for property purchases dropped for the first time in 10 years, and new construction activity dropped by almost 50% in the second half of 2022. The real estate crisis, a rigid zero-COVID policy, and some population issues have raised some serious concerns about the future of China's economy. But Ray Dalio believes the country's future is still quite bright. Here is Dalio's assessment of the Chinese economy and whether you should invest in it.
I want to be clear in making that from my getting to know the leaders, and I don't know Xi, but I know those around them, that they are reasonable people. And there's going to be a change in leadership that we're going to see on Sunday. And you're going to, in my opinion, you're going to bring reasonable people into that. There's a culture, there's that. And then there's a lot of uncertainty and a lot of problems. So let me rattle off the uncertainties and the problems that are temporary, that could be temporary, but they could be longer lasting. The first is they have a debt crisis that, in my opinion, they've allowed to go too far into the bones of the economy. Mm-hmm. So it's affecting local governments, it's affecting financial institutions. It starts with real estate. Real estate is 25% of their economy approximately, and then the majority of savings. So it has a wealth effect, it has a negative, and it's passing through the system. So that's one. Second is that there's this question of, are they still in favor of free enterprise and the market system, and what does common prosperity mean, and so on. Quite a lot of confusion regarding that. From my operating there, they don't want to mess with that system very much. She doesn't, because when they did some things like shutting down some of the tech companies because they want to break up the minority, these large companies, they also did minority things. Anyway, so let me go number 3, COVID. Okay, number 4 is demographics. Okay, demographics is particularly important in China because of the culture in China as well as the one-child policy. You know, for the family takes care of the family. And so the tradition is that the children take care of the adults in old age. They don't have a well-developed pension system. And so what happens is with the one-child policy, a husband and wife has 4 parents that they have to take care of. System can't deal with that. And so that's a main thing. It relates to COVID. You know, they have something like 350 million people over 65. So if they don't deal with, so we have COVID. So you have a number of these problems. You have a climate problem and a water problem in China. So China's got a lot of those problems to deal with. But the real question, and we all can have problems, the real question is, where is that beacon? Is that beacon, and we're going to learn more about that based on who's appointed to what jobs and also what statements are made. Is that beacon continuing to do the things that raise productivity and inventiveness and so on? So we're going to learn more. But I think that as far as investing in China, China is the, if you take certain industries, it's main competitor, but it neither should know, in my opinion, not. You have to have a certain amount in China. I think the longer term picture in China is still bright because I know the people and I know the culture and I think it's good, but they have major issues now.
Despite recently relinquishing control of his $150 billion investment firm, Ray Dalio remains one of the greatest investors of all time, having popularized many commonly used practices in today's financial world. What do you think about his assessment of the US and Chinese economies and advice on investing? Please let us know what you think in the comments section below. Also, ensure you hit the like button, subscribe to the channel, and check out our other videos on crypto, investments, and the economy. Thanks for watching.